And the way that an S-curve works is the time it takes to go from 0 to 10% adoption is the time it takes to go from 10 to 90% adoption. So if it takes 12 years to get to 10%, it takes another 12 to get to 90, which is a parabolic turn. And so we're just entering that phase right now.
Moss delves into Bitcoin's growth trajectory, connecting it to broader adoption cycles seen with transformative technologies. He uses the S-curve model to illustrate how Bitcoin has entered its second phase of adoption, a stage characterized by institutional and sovereign participation. The first phase, marked by retail frenzy and early adopters, laid the groundwork. But now, with a pro-Bitcoin Trump administration and influential figures like Elon Musk embracing tech innovation, the stage is set for parabolic growth. Moss likens this phase to a freight train that accelerates rapidly once it gains momentum, predicting that Bitcoin adoption will move faster than many anticipate.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
What I heard from a lot of these international billionaires and wealth fund managers is that they're all seeing that the U.S. is angling for this strategic reserve, and they're all preparing for the counter on that. But what they've been doing is they've been sort of waiting secretly, as you said, because remember Trump had recently come out and threatened the BRICS. He said if you start your own currency or do anything to move away from the dollar, 100% tariffs on you. Yeah. So the world is sort of a little bit scared of having the wrath of Trump. They don't want to get caught behind, but they also don't want to upset him at the same time. And so the word that we've heard, that I've been able to hear, is that they're all secretly buying, as you said, sort of preparing. Right. And as soon as the U.S. sort of comes out and moves, then everybody can announce in unison. And so I think most people are probably unprepared for how fast this will go as soon as the news breaks. It's interesting how like a fundamental event, like a news event, could trigger a run on an asset, but then you can look at the chart and say, well, the chart sort of predicted that as well. So when you look at this 4-year cycle, we can see that in the second phase, which we're going into right now, is the steepest and the fastest part of the full four phases. And now we have the Trump administration being pro-Bitcoin and with Musk being on there pro-tech. And that just happens to coincide with the second phase that we're going into, which is the fastest part of the adoption cycle. Yeah. So it's just very interesting how this plays out. But what happens is there's a few ways you can look at this. And one way that you would look at tech is with a tech adoption is with an S-curve. And the way that an S-curve works is the time it takes to go from 0 to 10% adoption is the time it takes to go from 10 to 90% adoption. So if it takes 12 years to get to 10%, it takes another 12 to get to 90, which is a parabolic turn. And so we're just entering that phase right now. Phase 1 is really marked by retail adoption. It's what's called the frenzy. Right. It's when the technology just was introduced and only the hardcore true believers, the coders, the nerds, they come out and they play with it. Phase 2 is what I call the frenzy, and this is where the institutions and the sovereigns come out to play. And we're certainly seeing that right now. And so it's overlaying exactly the way this maps out, just like the way it has 5 times before. Senator Lummis, who submitted the bill to have the strategic reserve put in place, she said the first 100 days. That's sort of been her mantra this whole time. And so I know a lot of people today were watching the inauguration, and I've seen it all over Twitter. He didn't announce it. He didn't announce it. He didn't announce it. It's like, there's a lot of stuff to announce today. He did pretty well. I listened to some of it. But they said 100 days, so like, let's just be patient here. Yeah. I think it's going to happen. He has a pretty good track record. He's been president once before, so we already know the promises he's made and what he's able to keep up with. And I think he has a pretty good track record. I think he'll come through with that. Now, what will exactly be called and what will the mechanics of that be? But let's give him 100 days. One thing that the Trump coin sort of represents is maybe just a gloves-off approach, like let's just go, right? And as a Bitcoin sort of maximist, I'm not super happy about that.
You're referring to, obviously, you launched the Trump coin.
The Trump coin, the meme coin.
And it hit Occidental Petroleum's market cap in 12 hours. Yeah. So does he sold
the 15th largest cryptocurrency in 48 hours.
Yeah. How do you cut through the noise, though?
Well, I think what you do is you have to understand that, the market, the cryptocurrency side of the market has shifted a bunch of times from, competing against Bitcoin to being DeFi to being NFTs to now it's just memes. And they're just jokes and they're just memes and everybody knows that. So they're like gambling mechanisms. So I think number one, most people should just realize what that is. And if you want to gamble, like by all means. And honestly, it's probably not a lot different than trading FX currencies or trading stocks for that matter. You have no fundamental belief in the underlying asset. You're just trading it. And so if you want to trade memes, I guess go for it. I would say, but just understand that, right? Number one. But I think more importantly, what it represents is that, under the old regime, under the Biden regime, we had, Elizabeth Warren and Gary Gensler at the SEC that were potentially illegally oppressive to the cryptocurrency space with Operation Choke Point 2.0, and so very restrictive on that. But what I think this sort of represents is a changing of the guard. Like Trump put out a meme coin. He's the president. Yeah. So
did he sell the meme coin to buy the Bitcoin?
Yeah, apparently he did, right? But now it's kind of like to the SEC, like, let's go. You're going to come after me? I'll show you why this was legal. You're not going to do anything about it. But then what it does is sets a precedence for everybody else. Right. And I think we're about to see an explosion of meme coins. Like, maybe we should launch one. Maybe Kitco should have one. I mean, it's just like, it's almost going to be like a free-for-all, which, it's a trade-off. There's good and bad in it.
Moss pivots to discuss government deficit spending and its impact on markets. Regardless of who holds the presidency, history shows that U.S. markets tend to rise over time due to continued monetary and fiscal expansion. However, the current economic environment presents unique challenges, including high inflation, liquidity constraints, and potential recessions. These factors, combined with the Biden administration's recent sanctions on Russian oil and the depletion of the U.S. Strategic Petroleum Reserve, create a precarious situation for the Trump administration. Yet Moss remains bullish on 2025, predicting a rebound in liquidity and market growth.
There's certainly liquidity out there. There's a couple things I'd say about that. So like number one, the Fed has been pretty hawkish, right? And they've been really trying to still run their quantitative tightening program. But you had Yellen at the Treasury, and she has been sort of counteracting that by releasing funds out of the TGA. They manipulated the debt ceiling to end this month in January just for Trump. There's a lot of bombs, a lot of landmines that were laid for the Trump administration. Almost $3 trillion in short-dated treasuries and bills that have to be refinanced under the new administration. We have now Biden just going out of office a few days ago, slapped sanctions on Russian oil. I mean, that's a really big deal. And of course, the SPR, our reserves of petroleum, are at all-time lows. So it's like, man, he depleted everything. And there's a lot of landmines the Trump administration has. So to your point, there's a lot of danger, a lot of trouble. Seemingly, a lot of liquidity is low at this point right now. Yeah. But yet, you see fart coin or Trump coin taking off. And I think, so one, there's money for that. But I think more importantly, and this is sort of a societal thing, Vladimir Lenin had said to John Maynard Keynes that the best way to destroy capitalism is to debauch the currency. And through a series of inflation, you can destroy the currency until all relation is lost. And he said that the best way to get rich would be gambling and theft. And so today, that's kind of what we see. And so we see this younger generation, and maybe not even just younger, almost anybody, where they feel like they've been left behind. And they just know that the traditional financial path of the 8% a year the S&P 5 is going to give them is not going to be enough. And their only chance is to YOLO into fart coin. Yeah. And so I think it's really systematic, or part of the system of where we're at today. And you see this in emerging markets when they break down, where there's high inflation, is people resort to theft and gambling. I think this first quarter is really where I'm looking at danger right now, because as I said, there's all these landmines that the Trump administration has to get over. So I think this is going to be dangerous. I think at some point the liquidity is going to come on, and then the rest of the market will go up. So I'm bullish on 2025 for sure. But what I would say back to sort of this reserve currency of the world, and really it's not reserve currency, it's like the reserve storage or reserve asset of the world. But I think there's lots of places that people store their wealth. And today what we're seeing is really this global race to commodities, if you will. China was running around. They bought up half the lithium mines in the world. Just, I think it was the last week, the U.S. Department of Defense went and bought tungsten mines. And so what you're seeing is nations are buying up resources in the ground, commodities, if you will. So they'd say, I would rather have, the U.S. said, I would rather have tungsten in the ground than U.S. treasuries. Right? China says, I would rather have lithium in the ground than treasuries, right? And so I think there's that race. And so the reason why I bring that up is that we're already seeing less countries recycling their reserves into U.S. dollars or U.S. treasuries. Yeah. Some of them are buying gold, more gold than any time in history, but some are also buying lithium or other commodities in the ground as well. And I think that is going to continue, that diversification of how we store or reserve our wealth. And I think Bitcoin just is one more piece of that equation. And a lot of times when people say, oh, well, they're going to, the governments will make Bitcoin illegal, I'm like, the governments allow us to store our wealth in art and collectibles and fine art and baseball cards and stocks and equities and bonds. And like Bitcoin is just one of a dozen places we store our wealth. They're going to get rid of every store of wealth. Like, of course they won't, right? And so I think it's just changing. I'm bullish on commodities. And the reason why is we can talk about the president, but really the president doesn't really matter that much. So if you look back all the way, I did a video on this from Clinton all the way forward. I think it was within 3 years and 3 months of every president, regardless, Republican, Democrat, didn't matter, the market was up 50%. Didn't matter. So I think what matters is the deficit spending, the government spending, the amount of debt expansion and monetary expansion. So that's going to continue, if not only accelerate. As a matter of fact, the deficit's up 40% in the last quarter, right? So like the deficit spending gets worse and worse and worse, and then there's this potential recession floating out there. Well, recession only means deficit spending goes up even more. The president matters a little bit, but it's not the biggest thing. What matters to me, the big trends that I'm looking at is this technology cycle, which we've already discussed, and then the world racing to commodities, as we've talked about. So I think those are the two big trends. And I think part of that commodity trend is being driven by back to the DoD, Department of Defense. On Trump's inauguration today, he said, we will have the strongest military in the history of the world. That's what he said. So he's recommitting to that as if that wasn't already a commitment. And so what does that mean? So the U.S. military is now seeing that a lot of these resources are strategic. And so, for example, China's been giving loans to other countries in exchange for, strategic resources. And now the DoD is actually forcing the U.S.'s hand into that. And so I think that's very bullish for commodities, specifically North American and Canadian commodities.
Greenland.
No, but seriously though, right? So if we think about 30% of U.S. homes are powered by nuclear energy. Where does the uranium come for that? From Russia. Right, and so part of that strategic is to get that uranium from North American countries, whether that be from the U.S. or from Canada, for example. Right, so I'm super bullish on that. I think commodities a little bit. I mean, if we're thinking about miners, we're at a mining resource show. In other countries that may have some geopolitical instability, South America, we've seen lots of mines being taken over. So I'm a little bit worried about that, but I am bullish on North American and Canadian resource mining for sure.
Moss believes these trends will drive significant opportunities for investors, particularly in North American and Canadian resource sectors. He advises viewers to pay close attention to these developments as they represent long-term shifts in how wealth is stored and transferred globally.